Dubai, a city of dreams, a symbol of luxury and enormous wealth. Here, skyscrapers reach the clouds, the most expensive hotels and stores open their doors, and business plans that once seemed impossible become reality. But now, the city that never sleeps stands on the brink of a major crisis. Investors, who for years have poured millions of dollars into real estate and businesses, are beginning to leave the emirate. Huge sums of money are fleeing abroad, and experts warn, if the situation does not change, Dubai could lose its appeal to investors forever. What is pushing the wealthy to safeguard their assets? Is this just temporary panic, or the first signs of a real crisis? In this video, we will reveal what is happening behind Dubai's sparkling facades and why the coming years could be pivotal for one of the richest cities in the world. In recent years, Dubai has transformed into a global hub for business and tourism. Skyscrapers, countless shopping malls, luxury hotels, and cutting-edge infrastructure projects create an impression of unshakable stability. But behind the glittering facade lies a different reality. Political tensions in the region, economic competition, and dependence on global markets make the city vulnerable, even for those who have invested millions here over the years. Investors who once considered Dubai the perfect place for business are now reconsidering their strategies. Skyrocketing real estate prices and constant growth no longer seem like safe investments. Some international funds have already begun moving assets to other countries, while private businessmen seek refuge in more stable jurisdictions. These are not just numbers on a page. It's a signal that, for the first time in decades, Dubai's reputation as the unshakable city of the wealthy is under threat. What's driving people away? First, the geopolitical factor. Saudi Arabia, as the largest neighbor and regional leader, actively competes for economic and political dominance. New investment policies, aggressive development projects, and control over key resources are putting serious pressure on Dubai. Second, global economic uncertainty. Falling oil prices and currency fluctuations can heavily impact businesses that are used to stability. But that's not all. Social and demographic factors are also affecting the situation. High dependence on foreign workers, migration restrictions, and changes in labor laws make businesses more cautious. Cities that once attracted talent from around the world now face an outflow of people, directly affecting the economy. The scenario experts are discussing is dramatic. If the trend of investor outflow continues, Dubai risks losing not only its real estate market position but also its reputation as an international financial center. Many predict that in the next 5 years, the city could face economic challenges that will test both the government and international businesses. And while this sounds like a dramatic forecast, signs are already visible. Companies are closing offices, major funds are relocating assets, and private investors are selling property at record prices to avoid potential losses. These processes haven't led to mass chaos yet, but they signal the first cracks in Dubai's perfectly polished facade. To understand why investors are fleeing Dubai, you need to look beyond the glittering facades and glamorous skyscrapers. For decades, Dubai attracted business with incredible opportunities, from tax incentives to rapid real estate growth. But the economic model that once seemed flawless is now showing cracks. Property prices have reached record highs, and investment returns are no longer guaranteed. Local analysts warn, what was once stable is now risky. Meanwhile, Saudi Arabia is actively expanding its economic influence in the region. New projects, investments in tourism, technology, and infrastructure are creating serious competition for Dubai. Prominent investors are starting to see Riyadh as a safer place for their large capital. And this isn't just speculation. Some companies have already begun relocating parts of their assets and opening offices there. Geopolitical instability is another concern. The Persian Gulf has always been a region of tense relations. Even minor conflicts or political changes can instantly affect markets and capital flow. For businesses handling millions of dollars, this is a clear signal. It's time to hedge risks. Social factors also play a role. Dubai has always relied on an international workforce. Thousands of expats, specialists, and laborers keep the city running. But changes in labor laws and global economic pressures are forcing companies to rethink staffing strategies. A talent outflow could lead to a shortage of skilled labor, directly impacting both business and the real estate market. The signs are already visible in the numbers. Luxury property sales have declined, rental rates have dropped, and foreign investors are increasingly choosing alternative markets. Even the tourism sector is starting to feel pressure. Some high-end hotels are seeing fewer bookings than usual. These are the first cracks that, if the trend continues, could evolve into a serious crisis. All of these factors together paint a picture that raises an important question. Will Dubai remain the city of endless opportunities? Or is this the beginning of an era where money and influence shift to other parts of the Persian Gulf? Millionaires and large corporations are already making their choices that could shape the Emirates' future for years to come. What terrifies investors even more is the uncertainty of political direction and the unknowns surrounding regional alliances. For years, Dubai appeared as an island of stability in the Persian Gulf, but now even the slightest signs of competition from Saudi Arabia are forcing businesses to reconsider their plans. Riyadh's new megaprojects, aggressive investments in tourism and technology, and control over energy resources pose a serious threat to Dubai's economic dominance. Investors feel it directly in their wallets. Real estate prices, which were skyrocketing just a year ago, are now showing early signs of stagnation. Some premium properties are being sold at discounts, and rental rates are dropping, something previously considered almost impossible. Large funds are already moving assets to more stable jurisdictions, from Europe to Asia. Millionaires who never considered alternatives are now actively seeking new places to park their money. The human factor is just as critical. Dubai has always depended on a massive influx of expats and skilled professionals from around the world. Their departure is a warning signal. Without them, business, construction, and the service sector cannot function properly. A reduced flow of foreign talent will directly impact revenues and the already uncertain real estate market. Another alarming sign is financial data. Banks and investment funds are noticing caution among clients. Major deals are being postponed, new projects are being frozen, and massive investment funds are exploring alternative markets. This isn't panic, but it is a serious shift in sentiment. And when the mood of major players changes, markets often follow. So the question is clear. Is this just temporary instability that can be weathered, or the first signs of a major transformation for the city? Investors who a year ago considered Dubai the ultimate safe haven for their money are now asking, where is it safer to park capital? And for many, the answer is already emerging. Riyadh, Abu Dhabi, and other regional hubs are becoming the new magnets for large wealth. In the next parts of this video, we'll show real examples of companies and investors leaving Dubai, analyze potential scenarios for the next 5 years, and most importantly, discuss what this could mean for the city itself, for tourists, for business, and for the global market. The first tangible signs of investor outflow are already visible. Several major international funds, which for years poured billions into Dubai's commercial real estate, have begun moving portions of their assets to Saudi Arabia and Europe. Luxury apartments in Dubai, once sold for record-breaking prices, are now sitting on the market for months, with owners forced to offer significant discounts to attract buyers. This is unprecedented. Previously, demand always outpaced supply. Large corporations are also responding to economic uncertainty. Some tech and financial companies are opening offices in Riyadh or Abu Dhabi, leaving Dubai as a secondary location. For the business world, this is a clear signal. The center of capital gravity may be shifting, and the city that has long been a magnet for international investment now risks losing its appeal. Another factor that cannot be ignored is geopolitical competition. Saudi Arabia is actively vying for control over key resources and infrastructure projects. New megaprojects in Riyadh, development of tourism and technology zones, and ambitious investments in international markets are putting direct pressure on Dubai. Investors see this and are making decisions. Where is the safest place to invest large sums when political and economic instability is looming? The human element also plays a critical role. Dubai has always thrived thanks to thousands of expats who power construction, services, and business. But rising uncertainty and changes in labor laws are forcing companies to consider alternatives. The outflow of skilled professionals is not just a workforce problem, it's a warning that the city could lose vital economic momentum. All these factors together create a domino effect. Investors leave, prices drop, businesses relocate assets, and even the tourism sector begins to feel subtle but noticeable tension. What was once considered invulnerable is now extremely fragile, and this isn't speculation. The evidence is already clear. In the next part of the video, we'll break down the numbers, showcase major deals that have been canceled, and explain how this trend could reshape the economic map of the Persian Gulf in the coming years. One of the first noticeable trends is the exit of major international funds from Dubai's real estate market. For example, several American and European investment companies, which for years poured billions into commercial and residential properties, have begun actively moving portions of their assets to Saudi Arabia. The most striking case involves a major American fund that, just 2 years ago, controlled over 50 luxury properties in Dubai. It recently announced a partial asset sale worth more than $1.2 billion and opened new offices in Riyadh. Another example is large tech and financial companies that previously considered Dubai the hub for their regional operations. They have started relocating offices and support centers to Abu Dhabi and Saudi Arabia, fearing instability and rising operational costs. These decisions sent a clear signal to the market. If even major corporations are leaving, the risks are real and cannot be ignored. The real estate market itself is also showing signs of change. Luxury apartments and penthouses, once sold for record-breaking prices, now linger on the market for months, with owners offering discounts of 20 to 30% to attract buyers. The overall volume of premium property sales has declined by approximately 15 to 20% over the past year, something that was previously almost unimaginable for Dubai. Tourism, long a key revenue source for the city, is also showing signs of strain. While overall visitor numbers remain high, large tourist groups and business travelers are becoming more cautious, with some opting for alternative destinations in the region. These are the first cracks in Dubai's long-standing reputation as the unshakable city of the wealthy and influential. Saudi Arabia, meanwhile, is actively taking advantage of this shift. New megaprojects in Riyadh and Jeddah, expansion of tourist zones and technology clusters, and ambitious programs to attract foreign investment are making the kingdom increasingly attractive to capital that once concentrated in Dubai. Investors now see not only opportunity but also stability, something Dubai currently struggles to guarantee. All of this creates a domino effect. Investors leave, businesses relocate assets, real estate prices drop, and international funds grow cautious. What was once considered unshakable, Dubai as a magnet for money and prestige, is now under serious pressure. And this is no longer a forecast. It is a reality gradually unfolding before our eyes. So, what do we see today? Dubai, a city that for decades seemed an unshakable symbol of wealth and luxury, now stands on the brink of significant change. Investors are leaving, businesses are relocating assets, premium real estate prices are falling, and geopolitical competition is only intensifying. Cities that once appeared stable are now showing the first cracks, and those who, just a year ago, didn't consider alternatives are now actively looking for new centers for their capital. Saudi Arabia, developing its mega projects and creating new economic hubs, is effectively challenging Dubai. And the question is no longer if this shift will happen, but when we will witness the real consequences of this competition. In 5 years, the economic map of the Persian Gulf could look very different. Dubai may lose part of its allure, while new centers, Riyadh, Jeddah, or Abu Dhabi, may take on the role of regional magnets for capital. For businesses, this is a signal to stay vigilant. For investors, a call to review strategies, and for ordinary tourists, a reminder that the dazzling skyline and luxury may conceal economic uncertainty. Dubai will remain beautiful and impressive, but its status as an unshakable financial and cultural hub is no longer guaranteed. And the most important point, those who are ready to act now, to adapt and make the right moves, can turn these changes to their advantage. Those who ignore the warning signs risk being left out of the new flows of capital and influence. Dubai is a city of opportunity, but even it has its limits. And right now, as investors flee, we may be witnessing the beginning of a new era in the Persian Gulf, where the balance of power is shifting faster than anyone could have imagined.